All right. We're here. Chill out. We're getting started right now. I'm Mitch Goldberg. You're watching my live stream. Be the boss of your money. This is where you come, the place to be, to learn about personal finance, investing, how to look at markets, view markets, how to understand what markets tell us. Markets give us the best information there is because it's live, it's in real time. We talk about other things like borrowing money, mortgages, paying for college, IRAs, Roth IRAs, retirement planning, financial planning. We talk about all of that here on Be the Boss of Your Money. And that's why it came up with the name, Be the Boss of Your Money. Because I want you to take control of your money, not your money to take control of you. That's what it's all about today. It's just a day that it feels like everything is falling. The whole reflation trade looks like it's in jeopardy, real jeopardy. So we have to take a look what's going on. Or is this just the bottom of the reflation trade? We should start to rebalance out of the reopening stocks again and go back into the reflation trade stocks. So let's roll the quick intro. While you're watching this, if you have any questions, I do hope you'll ask away in the comments. Say hello. Let me know where you're coming in from. I love hearing from you. It's the best part of doing this. If you're watching in the replay, same for you. Hit me up with questions. Let me know what's on your mind. Words of encouragement and words of appreciation are always appreciated here. Here we go. If consumers think And we are so back with a vengeance. We are talking about personal finance. We're talking about the market. Most importantly, why does today feel so crappy in the markets? It just seemed like nothing could get out of its own way. Yeah, listen, the NASDAQ was up a little bit. The Dow got hit hard. I wouldn't say the Dow got pounded. I mean, the Dow was off 300 some odd points. It was off less than 1%. It really takes about a 1% move in a major benchmark to really get my attention. It doesn't get my full attention. It's not like I stop my whole day to just stare at the market and what's going on and I have to figure this out. I'm just going to look all day at my screen and get that, that computer face people get when they're trying to figure out what to do next. And you just look at the computer like this. And it's like an hour goes by, 2 hours go by. No, I'm not into that. Forget the computer face. All right. We need to focus. We need to move on because the day-to-day fluctuations don't really mean that much. What really means something is the message in the market. So let's just take a quick look. We'll start with the review. I'm going to show you some things that I just happened to be looking at last night, and I think they're important. I'm still looking at them, obviously, today. So let me know how I'm coming at you. I hope I'm coming out nice and clear. I already see a friend out here. Andrew's out there. Drop some knowledge, buddy. Always learning. Thank you very much. And I'm always learning too. And I learn from you. And that's why I love your questions, because sometimes, more than sometimes, I'll get stumped and it gives me a reason to go out and learn something new, figure it out. And let's talk about the bulls and the bears. You see behind me, I have a couple of bulls. And over here, I've got the bears. Over my shoulder, I've got the bulls. It's always a battle, the bulls and the bears. But these are cute bulls and bears, okay? So let's get on with it. Here we go. Was that too enthusiastic? Natalie, you're cracking up while you're listening to this. I feel like I just sounded like Mr. Krabs from SpongeBob. John is out there. Hey, John, how are you? Thank you so much for joining me. Really appreciate that. I enlarged this screen, so hopefully you could see it on your smartphones there, or wherever you're watching this. But Dow off 323 points. No great shakes. The NASDAQ up, barely up 13 basis points. 19 points used to be a big day for the NASDAQ. Now it's like it's nothing. Keep in mind the NASDAQ's almost 15,000. S&P down 20 points, no big deal. Citigroup and Bank of America both have year-end targets for the S&P a good deal lower than where the benchmark is right now. Gold just sits there around 1800, up and down a little bit, doesn't really do much. Oil got hit hard. Oil is actually down. It was down over 3% today, but oil is down pretty substantially in recent history. Let's go on. The VIX, you know what, as bad of a day as it was on the street, you would think the VIX would be skyrocketing like into the 20s. I've been saying if the VIX closes above 20, we are going, I can't really whistle that loud, but we're going whoop, I think down pretty big. Okay? Like I'm talking like a sudden correction is what I would expect. So the VIX, that's wait, are you seeing my screen? I'm sorry. Let me put myself back up here. Okay. The VIX, you see the VIX? Okay, 17.97. You would expect that would be up to like 20 something in a day like today. But it just goes to show you that the market, investors are taking things in stride. Investors are so far pretty calm. I feel like investors have a good handle on this. Today was not a sense of panic. It was just a generally down day. The Russell 2000, that was off 1%. Russell 2000 has been coming in a lot lately. And that definitely to me is a message in the market that the domestic economy is going to get a little worse. The small cap stocks, which is what the Russell 2000 benchmark, the index tracks. By the way, you can't invest directly into an index, but you could invest in a security that tracks or mimics an index. I know I sound like a walking disclosure here, but I have to say it. All right. So if the small cap stocks, generally speaking, they are, let me just raise this a little bit. Small cap stocks are more sensitive to the domestic U.S. economy. They get more of their earnings and revenues domestically. They're not quite as good as borrowing money as large companies are. They don't get the same deals. It's not the same ease. They don't get to sell stock like large companies do. Large companies just hit the bond market very easily. Small companies, not so easily. So when you see the Russell 2000 going down, it's an issue, but it's not causing a dramatic tank in the market. Now, we have to separate the economy from the stock market. I could give you all the reasons why I think the economy is going to have some trouble going forward. Okay. And those reasons are, number one, the Delta variant of COVID continues to spread like wildfire. And it's everywhere, even where I live on Long Island, where we've got a pretty high vaccination rate. We're still in that yellow zone. If you look at the map on the CDC, there's 4 stages. 4 is the worst, 3 is second to worst, then 1 and 2. We're 3 on Long Island, but a lot of places are red, 4, like emergency level. Okay, so just wanted to get ahead of this stuff. Okay, so let's take a look at some other important things. The Dow tumbles, Robinhood. Okay. Before we get to Robinhood, I think that's like a really big deal. By the way, I see some of you watching this out there. While you're watching this, if you could give me a thumbs up, maybe a heart, some reaction, applause, depending on what platform you're watching from. This way, I see your name, I get to see who's watching. It gives me an idea of where you're coming from, and I really appreciate that. Nelson is out there. Thank you. Those bears are coming out of their caves. You are right, but my little bears these guys are so cute. These are supposed to be grizzlies from National Geographic. So I support the bears. There we go. I love animals. Okay. Thank you, Nelson, for joining me. And yes, John, I don't even remember what we're saying yesterday, to tell you the truth, but thank you very much. Okay, so Nancy, hey Nancy, how are you? So nice of you to join us. I really appreciate that. That's Nancy. I will never. I don't know if I could ever call you by that last name. Smetana, right? I know you as Denson, but I'm so glad you're here from elementary school. I have a special story about you, Nancy, from like third grade. Yeah, that's how long Nancy and I go back. Keith is out there. Josh is out there. Filippo is out there. Thanks, guys. Really appreciate it. Thank you for the support there, Josh. The thumbs up and the I don't know the love face or whatever. Thank you, buddy. Really appreciate it. Yep. Yeah, Nancy from Jericho. I know. I used to see your brother around town once in a while. I don't know if he's still in New York. I think he wanted to go to Texas. OMG, yeah, OMG. I got that story. I'll have to tell you about it one day if we ever have like another high school reunion. It's like, yeah, our 40th high school reunion is not that far away. Okay, so let's take a look at a couple of things. Okay. Why am I showing the screen? Okay, ISM services. You can't even see that. I don't know if you could see that too well. But ISM services numbers came out very strong. Scott Wren of Wells, he's a pretty smart guy. One can make a rational argument right now. Investors are not all that worried about the Delta variant's potential for rattling the economy. Okay, I get you. The surprise move in bonds. Okay, so let me just get out of this stuff. Bond yields got crushed again today. So the 10-year Treasury, all right, is we have to take a look at this. The 10-year Treasury was up a drop. It's 1.18%. It was even lower today. Everything about the 10-year Treasury to me is screaming nasty recession, no inflation. The Fed is going to have to keep pushing stimulus. But the stock market is telling us a different story. And some strategists are saying, don't let the low interest rates fool you. They don't mean anything. The reason our yield is so low is because the interest rates from Europe and from Japan are even lower. So our 10-year Treasury at 1.18% looks very attractive, and that's bringing in buyers. Okay, that's a mixed message to me because just interest rates, if we're in such a strong economy and we have such strong inflation, such high inflation, I feel like interest rates should be a lot higher, and they were 1.75% on the 10-year Treasury earlier this year. Now, the things I wanted to show you is this. The VGLT. Okay, this is an ETF I'm going to show you. All right, you just humor me for a second. This is the Vanguard Long-Term Treasury Index Fund. Okay, and forget the chart there. Year to date, it's down 4.43%, down 12% over the last year. Okay, but if you look at TIPS, this is an ETF from iShares that tracks inflation protected securities. Okay, in the last year, it's up 2% versus being down about 12%, and it's up 1.6% this year. So the bond market is definitely telling you as far as what real investors are doing, what not just like esoteric, like, oh, treasuries, the yields are moving around. I'm telling you what real investors are doing as based upon exchange traded funds, which investors buy and sell every single day. That's telling you that inflation is coming around and sticking around. Now, I realize I am still in the camp that most of the inflation we're seeing is transient for the products, for the lumber, for the steel, for the aluminum. We have just so much capacity for everything. The capacity is still there. The supply chain disruptions are really the problem. Wage growth and housing prices, though, those are a lot stickier. And that, I think, is going to stick around. Those are like healthcare expenses and college costs. Those are just, once prices for those things go up, they don't seem to back down. I see your comment, Nancy. It's nope, he's back on Long Island. Well, good to have him back. If I need a podiatrist, I could give him a call. Thank you very much. So though that's the things that I'm looking at. Now let's take a look at some of the stocks that we have to look at. Let's look at the meme stocks. AMC. Okay, that was 35 at its peak. Now I'm sorry. the day range is 35. Its year high was 72. AMC, and now AMC is 29. You see that? 72.62, and now it closed at 29. So people are really losing their shirts on this if they didn't get out fast. And if they were a Johnny come lately trader, oh, it's going up, I'm just going to buy whatever's going up. They've gotten crushed. I just hard to imagine how much money people are losing. But it's traded in a big range today of 29 to 35. This is just the day range. GameStop, which was 483, closed at 146, down $6, down 3%. AMC was down over 11% today. Bed Bath & Beyond was down. That stock was 53, Bed Bath & Beyond. Now it's down to 27. Costs, I don't know who that pays attention to costs. Clover was up to 28. Now it's 7 and change. It was up to like 28 for like 3 seconds a couple of weeks ago, and people were like, oh, I told you, Clover. It's still a meme stock. But Hood, that's the symbol for Robinhood. So why is Robinhood up 50% today? A new 52-week high. As great as that looks, okay, its high for the day was 85. So it was $85 a share here, okay? You see that $85 a share? But it closed at 67, closed at 70. It's still up 50% today. Why? And it's down about $2.50 in aftermarket trading. I think, I know Jim Cramer on CNBC was out talking about this, but I was saying this before I saw him. It's a meme stock. It's, people see that there might be some shorts in it, short sellers, and it's very hard to short the stock. There's not a lot of stock available to short. So the few people who are short the stock are just getting absolutely murdered. So they've got to buy the stock at higher and higher prices to get out of it. And, people see the stock trading, it's a big company. It's as far as its valuation goes, but it's only a small float. Shares outstanding is a lot, but the float, the amount of shares that are actually available from their IPO earlier this week, it's only a tiny amount of the stock. So there's not a lot of stock to buy. So it's just a thinly traded stock that is rocketing up. It helps that Kathy Wood from the ARK Fund bought a ton of the stock, but how much more could she keep buying? And is her buying power keeping the stock going up? This happened with Discovery Communications and a few other stocks that a big fund manager was buying his own stocks that he had in his portfolio over and over to keep the stocks going higher. But once you realize that all the buying power comes from one person or a very small group of investors, that's usually a house of cards and it can't be sustained. Okay, so just want to let you know that's what's going on. Okay, let's go back to the watch list. Keep looking at the sector ETFs. This is what I look at every day. Okay, so communications barely up, technology up a drop, but everything else was down. Financials, building materials, industrial stocks, energy stocks. Energy stocks are the worst performing stocks of the day. We came into this year thinking that energy stocks would be the best place to be. And it's, it had a big run. Let's see how energy is doing so far this year. It should still be doing, it's still up 27% this year, 27.99%. If you see that number, okay, 27. It's not letting me highlight it. Sorry, 27.99%. You see that there. All right, so stocks are getting rocked with the exception of a few of the tech stocks. So I'm going to just go one more thing here and look at the FANG stocks. I won't make you look at the computer screen until I find it. Boom, we're here. Pop myself back up at the corner. All right, Apple was off a drop. Amazon's, you look at the spread between the high and the low, 3,700. It's like a $37 stock going to 33. It's not the end of the world, but it's just not something you expected from Amazon, right? Just about a 10% correction. Facebook also 377 to 35. Google is still hanging out right off its high. Microsoft is still hanging out right off its high. NVIDIA is still hanging out right off its high. NVIDIA, by the way, had a 4-for-1 split. So that's why you're not seeing it right now at $808 a share. You're supposed to buy a company called ARM Holdings, a British semiconductor company that's just an outstanding company. But British regulators might block that deal and for reasons of national security. So we'll see if they can get that through. I think it's more of a plus if they get it through. than a negative if they don't get it through. So I don't think it's a death knell for NVIDIA by any stretch. That's just my opinion, by the way. That's not a buy or sell recommendation. Is that okay to say? All right. So enough of that stuff. Cities. Oh, this is what I want to show. This is what I wanted to show. This is the last screen share I'm doing for now. Okay. All right. Cities year-end S&P target on the low end. The city sees Bank of America sees 3,800 call on the S&P 500, but Citi is about a 4,000 call for the S&P 500, and the S&P 500 today went out at 4,400. All right, enough of that. You guys have any questions? Let me know. What's up with the dollar? Finally, a question. What's up with the dollarizing? What is that telling us? It's telling us two things. It's telling us that our interest rates are higher than everywhere else in the world for safe sovereign debt. It's also telling us that, and this is a little esoteric, I think, but you see what's happening with Chinese stocks. China is clamping down on their social media stocks, their education stocks. Now they're gambling stocks. And I think that's spooking a lot of international investors. I think China is trying really hard to become a developed market and get their currency, the yuan or renminbi, to be a global currency. But investors are very afraid of what China is doing in terms of overpowering its technology companies. When you have like a Facebook or a Google, they're collecting information about us and they're storing that information about us. It's on their servers and they're using that information to serve ads to us, to serve ads. That's what it is. And they're using social engineering tricks to keep us scrolling through the platform. Now, don't get me wrong. I love social media. I enjoy it a lot. So that's the grand bargain I made. That's the grand bargain I made with myself to be on social media. But in China, they don't want companies like Alibaba or Didi or Tencent to have information about their citizens. To China, it's like they want to retain the power. If they're losing the power, if they're not retaining that information, then they're losing power. And they don't want corporations to have that power. They want it. And I think that's a big piece of the crackdown, and I think that's making the dollar more attractive. We're also expected to raise interest rates here and ease up on stimulus because of the pandemic. We're expected to do that first. And our economy is right now the best economy out there. So, the U.S. economy, I don't know. When I say our economy, I'm going under the assumption that you're in the United States. You might not be. So I'm just saying, that's why I'm saying that. But the U.S. economy is very strong. And even though we have a COVID surge because of the Delta variant, it's still not as bad as most other countries. And we still have about half of the United States fully vaccinated. I think 70% of eligible people have received at least one jab. So the United States is an attractive place to be. And that makes the dollar an attractive currency. So that's where the dollar is getting stronger, and that's the message it's telling you. That's the whole ball of wax. It feels kind of fickle, the market. I feel like a lot of stocks that are up, especially financials and some of the big tech stocks like the FANG M stocks that have done well. To me, it looks like investors are starting to go into profit-taking mode. And it feels like that profit-taking mode is not just going to be a 1 week wonder. We're past peak. We may be. Oh, this is the big thing. Then I'll let you go. We're probably past peak earnings because the second quarter earnings, which are being reported now, out of 350 companies so far in the S&P 500 that have reported earnings, 88% beat on the bottom line on earnings, 87% beat on revenues. Are we going to get that again for the next quarter? Well, we're comparing every number now to a year ago, which was the bottom of we were in a recession in the United States. So the comparisons are easy, but as those comparison quarters roll off, the comparisons are going to get harder. So it's going to appear that growth is not only not accelerating as fast as it was, it'll be decelerating. It doesn't mean negative growth, but if you're paying a certain multiple for stocks for a certain accelerating growth and you don't get that accelerated growth, well, you're going to pay a lower multiple for slower growth. And I think the market's going to have to adjust to that. And I think that's why stocks are just looking iffy, even though we hit records yesterday. I keep saying this, that this is the rally that people love to hate, because it's how do I say this? It's being led by a smaller and smaller group of stocks. And that's where we are. So we're past peak stimulus. We've got the child tax credit going out. We're close to getting a bipartisan deal on infrastructure. But after that, what do we really have left? Now, if the Biden administration does get their budget through reconciliation, that'll be like some more stimulus. But the peak stimulus is probably behind us. And this is what investors are starting to worry about. They're asking themselves, is it still worth it to pay such high prices or hold on to stocks that are so richly valued, that are up so much? Or maybe we should just take our money out, go home happy, and we're not forced to swing at every pitch. That's the way I'm putting it. All right. So I appreciate everybody watching. Thank you so much. Your time is very valuable, and the fact that you chose to spend some of it with me is very valuable. Here's a background look at the studio. Pop myself up here. So this is what the top-down version from over the left shoulder camera angle looks like. Just wanted to show you that, and I will be back tomorrow. Thank you very much.